a stock. Okay, it's like they're making an announcement that they're going to be in the stock market and they're accepting new investors. I am gonna be playing a video to where it can explain exactly what IPO is, and we could go like it could go a little bit more in depth so you could understand better. All right, let's go and listen to this video from CNBC real quick. I always go to them. I don't know why I like this. I like this news channel. I always try to just go on there because it just flows better. I don't know what is their editing or whatever it is, but it flows.
As the saying goes, ideas are a dime a dozen. Acting on an idea, though, can make all the difference. Say you
turn your vision into a startup. It starts small, then it gets even bigger. Then it gets even bigger. Until one day you make it to decide it's time for your company to go public.
So basically, it's like you're a small business and your business gets so big to the point where you need more funding and more investors in that company. I feel like it's a big move for a company to do. To move forward and basically grow the company to be big, like basically like Amazon.
IPO stands for initial public market, which essentially means you're turning a private company into a public one. So when it's private, a company is normally owned by a small number of investors. That usually consists of people like you, your friends, or parents, plus professional investors like a venture capital firm. Once the company goes public, you're opening up that business to be owned by a large number of people. In effect, the firm goes from being owned by just a few people to potentially tens of thousands of shareholders. To commemorate the event, most stock exchanges hold a ceremony of sorts. At the New York and London stock exchanges, you'll ring the bell.
I'm drinking on the Casa Amigos. It's a wave right now, but shit, I've been like tequila. So when this came out, I tried it. It's so smooth. I had to try it out. I've been drinking on it since.
At the Hong Kong Stock Exchange, you'll strike the gong. So why go public? Well, going public raises a lot of cash for a company. With that money, it becomes easier to scale and grow, invest in infrastructure, and attract top candidates.
They always said that when the bigger the location of it, like like he said, infrastructure, right? That's the basically the size of the building, right? It's a building, right? So the bigger your building, the more money you put into it. It shows power. It basically shows power, and basically because money is power, right? It basically shows power in your company. So a lot of companies will get like huge skyscrapers down like in New York type of stuff. It's just basically showing power of how the business is making millions of dollars.
Plus, there's the bragging rights you get from being listed on a stock exchange. It's important to note that large companies can also stay private too. IKEA, Mars, Aldi, and State Farm are just some examples of massive companies that are private. After all, going public isn't a simple process, normally taking about 4 months to complete. The company will start with finding what's known as an underwriting firm, typically an investment bank or several. If and when the firm takes on the job, they put up the money to fund the IPO, essentially buying the shares.
Yo, everything has to go through the motherfucking banks, alright? You gotta build your relationship with the banks as much as you can. Get credit, you feel me? As much as you can. I'm gonna start doing credit videos as well, too. So you gotta build your relationship with the bank.
Before they're actually listed anywhere. The firm works with the company to determine what type of security to issue, an offering price, the number of shares, and the optimum time to bring a company to the public market. In the US, they also handle registering with the US Securities and Exchange Commission, which makes sure all of the financial information has been disclosed and is accurate. Then you're finally good to go. The underwriter's goal is to sell shares to the public for more than it paid the company. After all, that's how they make their money. But going public can also mean a nice payday for the business's founders and early investors. You often hear about people becoming millionaires or even billionaires after their company goes public.
That's crazy. So it's basically a big payday for me. I finally get to pay myself. A lot of people say they'll get a business and they'll not even get to pay themselves until 2-3 years into their business. A real check, a real $10,000 check, $1 million check. You know, like in their case, they're cashing $50 million checks, $25 million checks. That's bank.
Here's why. If you've worked at a private company that's intending to go public one day, sometimes part of your compensation is given through equity, part ownership of the firm. It's a way to hire talented people without a lot of cash up front. And if the company does go public, you get a piece of it at its new valuation. Here's an example. When Snapchat went public in 2017, its founder, Evan Spiegel, scored big. Spiegel got a stock grant of $636.
Put down in the comments who invested in Snapchat as soon as the IPO dropped, because I know I did. So let me know in the comments. Just let me know who invested, how much did you invest, and did you get profit so far? But I enjoyed my little profit of Snapchat.
The company went public. The following year, he sold more than 2.6 million shares. The sale of his stock was equivalent to $50 million. The number of companies going public is constantly fluctuating. Globally, 1,764 companies floated in 2017, a nearly 50% increase since 2016. And the most IPOs since 2007. 189 of 2017's IPOs were in the US, a 70% increase from the year before. A few of the biggest IPOs in history include Facebook, Visa, and General Motors. And in 2014, Alibaba smashed the record with its debut on the New York Stock Exchange, bringing in $25 billion. All that said,
wow, $25 billion IPO. So this man basically became a billionaire overnight, like in one day. Like, that's insane. And Robinhood is actually seeking $35 billion. So they're gonna smash the record of the seeking the highest IPO. Actually, $35 billion. That's a big payday for Robinhood.
Public has its drawbacks. Publicly traded companies are subject to oversight by regulators like the U.S. Securities and Exchange Commission. And once you list
that big payday, man, investing my money, but shit, I don't know yet. Let me know in the comments if you can invest in Robinhood too.
Sitting on an exchange, you're not just reporting to yourself anymore, you answer to all your shareholders. If you don't make them happy, you can be sidelined or even fired from the company.
I don't know if y'all be seeing movies where like somebody will be the CEO of the company and then get fired. I think that's what they mean. They mean when get fired, and then when you put your business out and all the shareholders vote on basically firing you and getting rid of you. So
found it. Hey guys, it's Upton. Thanks for watching. For more of our videos, check out what.
All right, perfect. That was a good explanation of what exactly IPO is. I hope you understand more. If not, go ahead and rewatch the video again, because they always say revise until you understand. So go ahead. Let's see on the today's July 19th. So it's basically today. It's a few hours ago when they dropped this. So let's see what they have to say about their reveal.
We begin, though, with Robinhood, because we are getting more details now ahead of that company's public offering, which could come now very quickly. More details on the valuation that it is seeking, which could be upwards of $30 billion for the company. The last time
it's an upwards of $30 billion to $35 billion by the title. So it's an upward. That's what they're asking for, but that's not. They might not get that, so they might reject it as well. So we might not even get a Robinhood stock.
Time it raised money was last September, before the world changed for it, before it saw a big boom in new users, and that was only about $11.7 billion. So now, obviously, seeing much higher than that, $38 to $42 per share, according to an amended prospectus, is what it is looking for. 55 million shares, and they're going to raise as much as $2.3 billion.
So they're asking for $38 to $42 per share. That's a lot. That's a lot, man. That's a pretty good amount. Looking to sell 55 million shares to raise as much as $2.3 billion. Wow.
So not surprising here that we're looking at this kind of a size, which would be comparable with sort of an Interactive Brokers kind of size, guys. But just again reflects the enormous demand and enormous uptick we have seen in retail trading. Miles, it's going to be very interesting to see what the demand is for the stock, but also if the momentum can continue for them as a public company. Yes, you're going to get things, even if you don't get another meme stock sort of frenzy, you tend to get things like that sort of spur enthusiasm. You just wonder how often those kind of things can happen.
Yeah, I mean, I think the question, for Robinhood going forward is just going to be, how do investors value the company, right? Is it valued as a fintech play? Is it valued as the next generation of stock trading? Or, to your point, is it valued more the way?
Or they're gonna offer more. Like, I need them to offer more cryptocurrency on the page. I want them to offer more, basically more when it comes to the margin, right? They charge for that. I don't want them to charge me for that, for having that. Of course, you could match me. Like, instead of charging me 5%, I think it is, for basically letting me borrow the money. Just let me have that, because it just match what I got on there. Because at the end of the day, I can't just cash out. Just don't allow me to cash out without paying you guys first. That's a different story. But don't charge me. That's messed up. If you're getting this, if I'm gonna invest in this, I hope they make those type of upgrades.
And Interactive Brokers is now, because of the size of the user base and because of the revenues they're bringing in. Obviously, Robinhood is a very significant premium to its would-be peers in the brokerage space. But how long that spread?
See, Robinhood, Chase, you can trade on Chase too. Chase don't charge you a dime, all right? It doesn't charge you a dime. I have Chase. I trade on Chase, and I also trade on crypto. What's the name? Robinhood too, because of crypto. But I do put some. I got some stocks in there as well. But that's because I had them already. I didn't want to just take my money out and cash out. You feel me? But eventually, I'm gonna cash out of Robinhood and then be all Chase, because I don't get charged from them. All right, that's what I mean by them. They charge you they let you borrow money. Actually, I don't think Chase don't let you borrow money. Yeah, Chase don't match it like that, but Robinhood do. That's I see where they could charge, but still, if they asking for $35 billion and they get it, consider that.
Sustains itself, I think, is going to be the real question for them as they begin their life as a public company. And to double click on the valuation, we were just chatting, in the break. The last time they raised money, they were valued at $12 billion. But there's some data showing that there were secondary market sales. This is data which comes to us from Rainmaker Securities. Secondary market private sales of Robinhood back in February, so right around the time of, right after the meme trade, and right when they raised, that emergency capital. They got the margin call. We don't have to go through all the T+2 nonsense there, but that valued the company at $40 billion. So essentially, Robinhood looking to go public at the level at which its stock has traded in some secondary private market transactions, and now it'll be part of the public markets, and there'll be more liquidity for that. I would guess, Sazi, if you want to do like the binary options guess on this, I would imagine the stock opens at a significant premium to the 38 to 42, but I'm not sure that the roadshow is going to see. I'm not gonna guess that we'll see like 3 increases in the range, right? It feels like that $35 billion is probably where the institutions that Robinhood's going to go meet with are comfortable buying the stock. I'm gonna guess though that we get a little bit of a home game meme, if you will, when the thing starts trading.
Yeah, I'm really. I could see it very easily getting a pop on the first day. I get it. It's a buzzy name. It's a name a lot of people have become very familiar with this year. But I am wondering, what is a trade-off of? I guess somewhat to Julie's question or point there. Is this another Coinbase where it pops on the first day and then it trades in lockstep? In the case of Coinbase, trade in lockstep with cryptocurrency. In the case of Robinhood, does it trade in lockstep with retail investor flows? Because those flows have weakened since the meme stock mania earlier in the year, which arguably is driving some of this high valuation that we were seeing on Robinhood here. But also, too, another question,
Cause like I see what he's saying. Cause it'll be like a hype to it, There'll be like a hype to it, and then eventually it'll just drop. You'll lose your money. Kind of like a crypto, like the memes. There's a lot of memes with AMC, GameStop, even Dogecoin. Those are just memes that got skyrocketed because everybody was just talking about it to social media. So it might just go up for that a few days, a few weeks, but eventually it'll drop, and then you'll lose a lot until they have another spike.
What is Robinhood? What is the next 5 years for this company? Are they the acquirer? Are they the roller play? Do they come out here and buy a company like a SoFi and really become a financial destination for everything in your life? That is to be determined. But even at a $35 billion valuation, like we're seeing here in the beginning, maybe $32 billion, we're seeing here this morning reported, their market cap is still would be well below a Charles Schwab. Charles Schwab is just a powerhouse in financial services. Its market cap right now is $130 billion.
Well, you want to say, what?
So they're not the highest trading. They don't have the highest evaluation when it comes to the trading. So 130 is the highest. So 35 billion is a decent amount still.
Hold on, I'm trying to Google this right now because, we've got $81 billion in assets under custody for Robinhood, right? So they're going to be valued at, let's call it 40. So every billion that they have is going to be apparently worth $2 billion in market cap. The quick Google machine tells you that Charles Schwab has, $600 billion in assets under management. So you're not getting. It's not a $1.2 trillion company. Last time I checked, right? So that's. These are very overly simplified. How are you valuing this business? 18 million funded accounts. So every million funded accounts is $2 billion of market cap, right? That's like the very quick and dirty math we're doing. And it would seem that that's not going to be sustained for, indefinitely, right? To your point about a Coinbase, the stock has come in significantly as investors, view it maybe as a levered play on crypto, but just simply aren't going to assign the amount of enterprise value per user that we initially saw in those early stages, and you kind of run the quick numbers here on Robinhood, and they are just way out of line with some of those industry peers in terms of how much each user is worth. But look, Julie, newfangled business model. Maybe everyone gets excited about it and talks themselves into it, and we're just the boomers looking at Schwab and saying, why don't they trade at premium? Blah blah blah.
You see that?
Right.
He's smart. He wanna get it. He wanna catch it when it gets up there, when everybody just hyped about it. Look at her, how much she's smiling. Cause I feel like she been put some money in there. All three of them put some money in that shit. This is promoting. They're promoting.
Speaking of Schwab, an important distinction to make is that at least
God, do. Come on.
some of that Schwab money money is indeed assets under management, not just assets